If you're mining Bitcoin right now, and if somebody comes out of the blue and they bring a lot of hash rate on the network faster than you expected, then your market share gets cut. You don't worry about what happens 16 to 20 years out if you can make a ton of money now. And so if you're a Bitcoin miner, it's a very lucrative high growth business right now, but it will move toward an efficient transaction security network later. And you would do well to buy Bitcoin, right? That's why it makes sense to hodl Bitcoin if you're a Bitcoin miner, because it's your hedge. If Bitcoin, it's a hedge against two things, right? It's a hedge against the inevitable protocol, which is the protocol says Bitcoin mining is going to get 90% less lucrative over the course of, right? Cut in half once, cut in half twice, right? Over the course of 12 years, you get cut in half 3 times. So it's a hedge against that, but that's a long term. It's also a hedge against the near term hash rate explosion. If you're mining Bitcoin right now, and if somebody comes out of the blue and they bring a lot of hash rate on the network faster than you expected, then your market share gets cut. In that situation, Bitcoin may win. If everybody believes Bitcoin's going to win and there's a flood of people to enter the mining business, you want to own Bitcoin. Mining's going to get competitive. Bitcoin's going to get more valuable. So you definitely don't want to be in a situation where you mine Bitcoin, you sell all your Bitcoin for cash, and then in that case, you're attempting to run a cash business in 16 years when the revenue's been cut in half 4 times. Right. And presumably if you cut 100 to 50 to 25 to 12 to 6, when you're generating 6% of the revenue and everybody else has had 12 years or 16 years to get in the game, it's going to be more of a commodity business. Right. Now, that's not to say that a Bitcoin miner can't compete and evolve. It may be a great business then too. It may be that Bitcoin miners evolve to be running Lightning nodes or running layer 2 platforms of other sorts. It might be that as a Bitcoin miner, you have a huge Bitcoin treasury and then you can generate yield on it. It's very logical for Bitcoin miners maybe to get into some of these other application areas that will pop up in time. And there are technology possibilities here. So I would say the logical thing to do in business is you don't worry about what happens 16 to 20 years out. If you can make a ton of money now, I mean, you might very well make enough money now to have 10, 20, 30, $100 billion of capital then, at which point you can go buy something else to get you in the business. And my other point, I guess, here is, yes, it's true, Bitcoin miners should keep Bitcoin, but it's also true that non-Bitcoin miners should keep Bitcoin. If you believe in Bitcoin, then the logic follows that no matter what business you are in, if you have operating income, you should invest in Bitcoin. Right. And if you are able to generate financing, if you can raise debt or equity, then you should also raise debt and invest that in Bitcoin. So that would be the case for other companies. Like MicroStrategy looks at it that way. We're not even a Bitcoin miner. But that's my thought on the Bitcoin mining network and the dynamic model over time. I think that some people intentionally misunderstand this, like people that are like proof of stakers. They intentionally misunderstand it, because if they misunderstand it, then they can assume that energy consumption is linear, and then they can, play the ESG card and pretend that they're, they do their virtue signaling and say they're doing something good for the environment because they're not using energy. Right. But the truth is they're not using energy, nor are they using technology. They're not using hardware technology, engineering technology, or energy, nor are they submitting their network to competition. And they're not using external capital, political or financial. what they're doing is they're creating a protocol, a virtual protocol in order to create security. And even there, if you're going to rely upon a virtual protocol to create security, you'd be better off to stake the protocol with an asset that is outside of the network, that is external to the network. So for example, the Lightning Network makes a lot more sense because it's staked with Bitcoin than if it was staked with Lightning Coin.